I highly recommend a integrated investment strategy rather than doing it the way most firms are doing it, which is cookie cutter and throwing you in a box. Now, that does take a little bit of time, but there is wisdom to it.
Welcome to the Market Call Show, where we discuss what's happening in the markets and the impact on your investments. Tune in every Thursday on Apple Podcast, Google Play, Spotify, or wherever you listen to podcasts.
Welcome to the Market Call Show. This is Llanes. I am the founder of Wealthnet Investments. Today we have an interesting topic and I'm really excited about diving in, so let's get going. Today I'm going to be talking about integrated investment management and your personal financial model. There's a lot of people that go and they get their investment management done by various companies, and they get what I call cookie cutter investment strategies. They're stamped out like cookies. And what happens is you wind up getting a watered down result. You wind up getting a result that is not tailored to your situation. So I'm going to talk about the difference between what 80% of what you're seeing being done on Wall Street and to what I believe is the best way to manage your investments, my investments. We eat our own cooking. This is how we manage our own money as well as our clients' money. But that's not the point. The point is I really want to share. I want to share the difference because a lot of people may not know the difference. So I'm going to talk about an exercise that we went through. We went through an exercise where we were actually looking at our clients and we were saying, okay, what exactly were some of the things that defined the transformation of going from a cookie cutter approach to an integrated investment management approach that is tailored to their particular situation, which gave them a better outcome, an outcome that is better, a transformation that is better for their life than they would have had they stayed in just a cookie cutter approach, which is done, again, by 90, 80% of Wall Street. So it really boils down to a few things. The first thing is it boils down to actually looking at three different ways of looking at your whole picture. You see, a good investment strategy cannot be done without an actual financial plan. But there's some dangers that need to be eliminated or reduced in order to have a great investment plan because the investments are integrated into everything that you do. So I'm just going to lay out just a few of actual things that we have actually done with the top 20% of our clients and how that differentiates between just having a standard and actually having an integrated solution. The first would be the erosion of wealth due to inflation and taxes. The investment strategies have been put together to eliminate or reduce the impact of eroding your wealth due to the inflation and tax scenarios. That means having investments that do well when inflation is going up. And that means minimizing taxes in many different ways. Another thing that we do to eliminate dangers, a good integrated investment plan should have very clear ways to deal with market risk, because market risk is a clear danger for many investors, for all investors. So dealing with the markets and mitigating those risks is super important. The third would be concentrated investment risks. Many times people think they're diversified, but they have all these funds, and these funds tend to stack risks on top of each other because they own the same type of investments. So getting rid of concentration risk is part of integrating your investment strategy. And then also making sure before you get your investment strategy together that you're using the resources necessary to eliminate catastrophic losses from life events like long-term care, disability, life issues. Those are really important to be taken care of ahead of time. And sometimes portfolio assets can be really ruined by not taking care of that first. Another big one is excessive fees, poor performing investments. It's very often that we see investments that have tons of fees on them, or maybe annuities that have a bunch of back-end costs or other fees involved. So avoiding investment scams is another big one, a part about integrating it. We have literally been in scenarios where very wealthy people have been sucked in and almost lost all their money because of scams. Scams of people that were actually in the news here in Colorado. And we were on conference calls finding out that people that were actually hurt by these scams were people that you would know, that were football players that you saw every day in the big stadiums. Crazy stuff. So having the due diligence to be able to avoid scams. Big deal. Protecting financial security from divorce and death. The portfolio has to think about that too. It needs to be integrated with the concept of what happens if my spouse dies? What happens if we have a divorce? Those are big issues. That whole category of things I just talked about was really eliminating dangers. So when you're constructing an integrated portfolio strategy, an integrated investment strategy, you start with the elimination of dangers and risks to your portfolio. When you're ready to turn your piece of wealth into peace of mind, go to wealthnetinvest.com and click on the Schedule a Call button for a free consultation and a portfolio review. At WealthNet Investments, we are invested in your victories. Now I want to talk about capturing opportunities. An integrated approach should obviously manage your investments to capitalize on long-term growth opportunities that exist out there. And we've talked a lot about ways to do that, and I don't want to dive into all that right now, but you really should be capitalizing, not just indexing everything, but capitalizing on long-term growth opportunities in your portfolio. The second would be increasing the income of a portfolio, especially as you get closer to retirement or you do retire. So now we're capturing opportunities, what we're talking about right now in an integrated investment management strategy. An integrated investment strategy should also organize and simplify your accounts. A lot of people get so spread out. Maybe they left a job and they didn't take that money and roll it over. And then you've got all these investments and it's not cohesive. It's not a cohesive strategy. So organizing and simplifying your accounts so that you can multiply your wealth. Big deal. Another thing, an integrated opportunity that you should look at is to improve the coordination between your advisors. For example, your CPAs and your attorneys, if they're viewing things in isolation and you are not looking at it holistically, you could get not necessarily bad advice, but not the best advice. So an integrated investment strategy will also coordinate between those professionals. An integrated strategy will also have tax flexibility to adapt to changing tax rules. There's a concept called tax diversification where you're basically setting up your accounts in a way that if rules and regulations change due to taxes, that you can change what you do. You have the account structured in a way so that you can lower your tax bill and not get hurt really bad. Another big thing is that an integrated investment strategy should free up you as an investor, should free up your freedom of time, your freedom, your location, and any relationships that you can deepen your relationships. So if an investment strategy is taking all your time, what good is that? How good is your life in that scenario? And it should increase your sense of confidence and well-being and peace of mind. Let me talk about another really important thing about capturing opportunities with an integrated strategy. That would be if you need trusts and you need to generate income that you're going to transfer to heirs. An integrated investment strategy should consider whether or not trusts make sense. They should consider how you're going to transfer money to heirs. An integrated strategy should also consider funding education for children and grandchildren, and even educating children how to invest wisely. You can have accounts set up so that it's also being for educational purposes for children. An integrated investment strategy should also capitalize on a strategy to get a clear retirement plan. So you have a real clear picture about how that investment is going to fit into your retirement plans. Really important. And obviously, an integrated plan should help you save on your taxes and expenses, and should also be incorporating your spouse and other family members. So we've talked about eliminating dangers, and we've just gone over some of the capturing of opportunities. That's different when you're using an integrated strategy. And now I want to talk a little bit about maximizing your strengths in your portfolio. Right now, everybody has an existing set. Anybody who's an investor has an existing set of investments. And it's really important to look at those investments that you have right now and evaluate them and making sure that you're maximizing them, and also making sure that you're maximizing resources that are available to you as it pertains to your investment strategy. So give me some examples. Are you maximizing your retirement accounts and the benefits at your employer? Maybe there's, depending on how it's set up, your 401k plan may have different fund options. An integrated investment strategy should consider what are my best options in my 401k plan and how can I allocate to them for my needs? And am I maximizing getting the full benefit from the benefits package that I have at my company? And that could also include your company stock and stock options. There's 5 or 6 different ways you could get stock, and each one of those have a different method of accounting, tax implications, and growth pattern for you. having that is a big part of integrating your financial plan. Making smart financial choices about your pension and your Social Security is also part of integrating that investment strategy. So that's another big part of maximizing your strengths of your existing pensions and Social Security that you have available to you. You also want to maximize the strength from your ability to retire early. You may be in a situation where you can retire early, and maybe that's a strength that you can capitalize on now. A smart investment strategy should also consider real estate and rental properties and businesses that you own if you happen to be in that situation, and how that applies to your investment strategy, the diversification, the income needs, et cetera, et cetera. An integrated strategy should also look at how you're going to minimize taxes and reinvest appropriately. With the resources that you have, what is that best way to rebalance your investments with and to reinvest? So there's a lot more to it than this cookie cutter stuff. And that's really the point that I'm trying to make today. You want to maximize your cash flow for better growth and to free up your time to have better choices in your life. So I highly recommend an integrated investment strategy rather than doing it the way most firms are doing it, which is cookie cutter and throwing you in a box. Now that does take a little bit of time, but there is wisdom to it. My firm WealthNet, we call it WealthNet Wisdom. We have an integrated investment management approach, and we have another process that we call personal financial modeling, which means we look at all these different dimensions and we do a personal financial model for you to determine what that investment strategy should be. So I just wanted to point out what we believe, what I believe is a better way to invest. If you want to know more, give us a call. You can go to our website, www.wealthnetinvest.com, if you want to learn more. And we can do a free consultation to see if you should be investing in a different way.
For the latest episode of the Market Call Show, make sure to like, subscribe, and follow us on Instagram, Facebook, and YouTube. If you enjoyed the content of this episode, please leave us a review and comments. The information in this podcast is informational and general in nature and does not take into consideration the listener's personal circumstances. Therefore, it is not intended to be a substitute for specific, individualized financial, legal, or tax advice. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a final decision. WealthNet Investments is a registered investment advisor. Advisory services are only offered to clients or prospective clients where WealthNet Investments and its representatives are properly licensed or exempt from licensure.